Hey, my name's James Nicholson. Welcome to my channel. Let's talk about what's next for the UK property market. A lot's happened in the last 2 weeks in particular. It's going to keep happening. And we need to have a real frank discussion about what you could be doing and what you should be doing right now to protect yourself and what opportunities might arise out the back of this. Now, this channel is all about my investment journey, and I want to invite you on that journey with me. I'm currently building my portfolio out. I'm building a portfolio for my two daughters as well. We've got Georgia, who's 21. We've just done 2 deals so far this year, which is going great. We bought a house in Doncaster at auction. We've refurbished, we refinanced it, and we took the money out of that deal and put it into a second deal in Dorking in Surrey. Now, you can check out all of that on this channel. We documented it, we recorded the auction. That's pinned as the first comment if you want to watch what happened at that auction. Now, we're also building a portfolio for my little baby Amelie. So do join us on the journey together by taking that finger of power, spinning it around, smash the subscribe button and hit the bell notification. So what is happening in the UK market? Well, one thing that's really causing so much uncertainty at the moment is inflation, right? Inflation is at record levels. It's absolutely crazy. The official number is around 10%, isn't it? But a lot of people say, well, that's just a certain basket of goods that they look at that are 10%. Some people are getting hit really, really hard, depending on what business that you're in, or whereabouts you live in the UK, or what you do for a job, right? Certain people are getting hit very, very hard with inflation. And so the government has a target to bring that inflation down to 2%. That's what they like inflation to be. And that's what I like inflation to be. I'm sure you do too, because that gives us some certainty. So over time, things will get more expensive. We know that, right? Think about how much like a Freddo chocolate bar is always talked about with inflation. Think about how much a Freddo chocolate bar was when you were a kid. Comment below and let me know, how much was a Freddo chocolate bar? Or what was something that you remember being really cheap when you were a kid? Comment below and let me know. I'm interested to see. But I remember they always talk about Freddo chocolate bars, and they were 2p or 5p, and now they're 10p or 20p. And so that impacts us all, inflation. So over time, things get more expensive. But we don't want that to happen too quickly. So what the Bank of England has to do is, when inflation gets to this level, we have to increase interest rates. So interest rates were like pretty much zero a year ago, and now interest rates are at 2.25%. This is the Bank of England's base rate. You will pay more than that when you borrow money. The banks that you borrow from will put margin on top of that. And so this interest rate, some analysts are predicting it could go as high as 6%. Now, that's been revised down a little bit now, but that's a worrying number, because if you have a 6% interest rate, it means borrowers will probably pay 9% on a mortgage. Now, if you've been used to paying 1% or thereabouts, and now you're going to go to 9%, that's a big hit. And that's really going to shock a lot of people. And so that is what we've really got to contend with as investors. So what that means is mortgage payments will rise significantly, which will cool the property market down and potentially give us a correction, right? And so there's analysts talking that potentially a market might come down in different areas, lots of percentages here, but a lot of people conclude that we might be looking at a 15% drop. Now, that could be avoided if inflation starts coming down sooner. Then the interest rates will not be raised as fast or as much, and so that will make a difference. Now, this will also change by region, and so the southeast is more likely to get hit hard than the north, because houses in the north are affordable, right? A lot of people in certain areas, I've done a video on this recently, you can buy a house in the north with just 1 times your salary in some areas of the UK. Whereas in London, it's as high as nearly 10%. 10 times your salary, sorry, not 10%, 10 times your salary, which is just not affordable. It doesn't work. So there's more likely to be a correction in London and the southeast than other areas of the UK, or the areas that have had big raises over the last few years are probably more susceptible to some big drops. So that's something that we've got to consider. Now, if you own property, then you're probably thinking, that's not great. I don't want my house value to go down. British people love to know that the value of their house is constantly rising. Well, here's what will happen. It will crash or drop, but then very quickly, within a year or two, it will start to creep back up. And if you're not looking to sell your house, then it doesn't matter, right? If you don't look to sell your house, then you're never going to cement that loss. So every asset that I buy for life. Don't buy anything to flip. I've never flipped a property in my life. I know some people do, but I like the capital gains that you get year on year. Like my first flat that I bought for 50 grand and now is worth 250, right? I don't want to buy that flat for 50, renovate it and make 10, 15 grand that I could have maybe back then. I want to hold it and make hundreds of thousands of pounds at later periods in my life. So that's very, very important to me, is capital appreciation. So if you're not looking to sell, then you're not going to have a house that you've lost 15% on, are you? Now, another thing that you should be really looking as investors is securing a good interest rate while you still can. And I'm recommending that you secure a rate of around 5 years before the next interest rate rise. Now, once those rates get to 6%, then I'm suggesting that you don't go for a 5-year fixed at that point, because you don't want to fix 5 years at 9% and have all that pain, because rates will come down again after a period of time. And so now, today in October, it's still good to fix a good long-term rate if you want the certainty. Now, if you don't have a mortgage, this doesn't impact you. What about investing going forward? Well, there's various strategies that you can use regardless of what's happening in the market, right? So I've just done a video shot today that's probably been released a couple of days before this one, where I talk about a strategy called rent to rent, where you rent a property from someone and then you rent it out as either an HMO on a room by room basis, or you rent it out as serviced accommodation. So you're going to put it on Airbnb or somewhere like that. That is a really good strategy that's recession proof, because you're going to agree the rent, you're going to fix it, and you're kind of getting the certainty. The owner of the property, they're the one that's got to deal with interest rate rises and all this other stuff, right? Those strategies could be very, very good for you. There's a lot of people telling me here on the comments on these videos that the market's going to crash 40% and that it's a terrible time to invest. Well, maybe it does crash 40% in certain areas. Is that not an opportunity, regardless of what the rates are? Because buy-to-let isn't going to die, it will just adapt. And so if the rates go prohibitively high, then the deals will stack up. There will still be deals out there. And if you can get the deal to work, fix the rate, and then when the market comes down and the rates drop significantly, you've already had it working at the higher rate. It's going to be easy when those low rates come back in, and they will come back in at some point. And so the market is a bit volatile at the moment. It is unpredictable, but there are still some very, very good deals had on the market that you could really, really be looking at. And so that's what I'm doing at the moment. I'm following the market. I'm checking out what deals are happening and just seeing, could there be some opportunities at the moment? Could there be some chains that are falling apart that maybe you could take a property at a discounted price at a fairly good interest rate today? Because just because we're at 2.25%, historically, that's still very cheap. It's a very, very cheap amount there. And so even if you look at longer term fixed rates on mortgage deals, they're predicting, you can see the rates. There are some long-term deals where they're not hugely expensive, and because the mortgage companies are expecting the rates to go down at some point as well. So the market is volatile, true. You should be fixing your interest rate if you want the certainty. That's a given, and that's what advice I'm giving to people and my friends and family. I want them, those that need it, to just get that certainty. If you've got a mortgage that expires next year, maybe pay the penalty to change the deal this year, because you are tied in, but you can pay a penalty to leave, and you need to work out with a mortgage broker if that could work for you. I'm not a financial advisor, but it's something to look at and have a conversation with someone that is a financial advisor, right? So there's lots going on in the market. That's what I'm doing. I'm still investing. I'm still looking for deals. I'm going to be looking at auctions this week, and I'll be sharing that journey. So if you didn't subscribe, at the beginning. Do give me a little subscribe now and you can see what happens going forward. Do check out all the other content on my channel and do give me a comment. Like, let me know your thoughts. What do you think is going to happen with the property market? I'd love to hear. And we're running a live event in London. I'd love to invite you to attend that event. So in the description, I put a link. Put your details in and then you'll get on the list. And then as soon as tickets are out, you'll get an email straight away so you can grab a ticket before they go. That's it from me. I'm James Nicholson. Check out all the other content, including this video right here. Bye for now.